The markets are at the crossroads, and the next few sessions could set the tone for the rest of March. Is it finally time to go long on this S&P 500 and Nasdaq, or are the cracks just beginning to show? Volatility is cooling off for now, but the dollar index bonds and TLT are hinting at possible bearish shift that could reshape the playing field. In commodities, silver and gold are trying to stabilize after heavy hits, while oil's decline deepens, dragging major players like Exxon Mobil and ConocoPhillips right along with it. We'll break down the S&P 500 sectors and big names like Apple, Microsoft, and Tesla, and in our special feature, we'll take a deeper dive into Nasdaq's midterm perspective and the critical levels that will define whether bulls can take control or if more downside is coming. Subscribe now, and let's dive straight into the charts while the waves are still forming. This is the volatility closure of today. Volatility S&P 500 index and US volatility index. Both of them formed bearish candles, and particularly the US volatility one, it formed after a big doji or a hammer. It formed a bearish engulfing. So the chances for tomorrow to go lower are fairly significant. That's all we can say about volatility. So tomorrow is the calmer day than today. Speaking about the dollar index, it is falling and formed quite a few strong bearish formations. This is a technically three black crowds breaking below the 200 days moving average, and on the weekly frame so far it looks very bearish. The question is, sometimes these three black crowds are an exhaustion formation, and if we look at multiple hourly frames, technically all of them from 1 hour to 12 hours are grossly oversold, and this could trigger a reversal. We don't know how big it would be, but tomorrow it looks like it is going to be a bounce. And speaking from the Elliott Wave perspective, dollar formed in just a couple of days. It formed a very aggressive impulse, which looks like complete based on some Fibonacci levels. And the chances right now is that we are seeing either a bounce or reversal. So this impulse could be a final one in the recent weakness, or it could be just the beginning of a move lower. So we'll be watching. So far the potential path here would be something like this. This is in case of the corrective structure. In case of an impulsive, we'll be looking for a bigger one here. But right now we still need to see a bottoming formation in order to call these paths. Now let's talk about bonds. This is the biggest concern of today. 5, 2, 10, 20, and 30-year yields formed yesterday. They formed a very strong bullish engulfing that we noted here in our daily update. And today, with these grid candles, technically they reversed, and they confirmed a reversal on the daily frame. So if we look at the bigger frames, they are also looking bullish for now, but they are closing tomorrow, and we would need to wait and to see what kind of momentum it builds. So far on a daily frame, this is bullish. And if we look at the TLT chart, so what we are seeing here is a very concerning move. Potentially this is bottom. Oh, this is not TLT. This is US 20-year yield. That's what I was leading to. This is potentially a bottom, and this is aligned with the two big candles on the daily frame that were built bullish candles. So this is potentially 1, 2, 3, 4, 5, either impulse in blue or in red. either count can be broken into 5 sub waves. Now, if this is a red path, then we would be looking for a bigger impulse right here. And if this is blue, then we might see some consolidation before another wave will be formed upward. So this is for US 20-year yield. And now if we look at TLT, we are seeing a totally opposite move. We discussed this before in our previous video. This is potentially an ABC structure, and this final wave here could be an impulse that is ended right now, and the big move here down, potentially impulsive. So I already mentioned that it's difficult to measure it because of several gaps, but if we consider the mirroring move with US 20-year yield, that's what we are seeing right now. And if we look at the candles, TLT candles, so these are fairly clear. After a strong bearish harami yesterday, a confirmation candle was formed, and that on a 2-day frame, we have a strong inside down candle, which could start a big bearish reversal here. On the 3-day frame, it is also a bearish formation. Potentially it's a kicking line, but slightly different shape. All right, so that's all for TLT and for bonds. So the bond market is about to turn, and it could possibly do it tomorrow, a big one. Now let's have a look at our commodities section, and we'll start with silver. Silver is bullish, no questions about it. So it formed a very nice bottoming candle, and yesterday we said it's gonna be more likely a continuation, and it formed today another continuation candle, bullish continuation. Unless we see a strong bearish moves, this is so far bullish. However, I'd like to emphasize that some hourly frames have been oversold, overbought, and right now we might see a little pullback. If we look at the 2-day frame, it also closed with a bullish candle, and technically it's a confirmation of a reversal on a 2-day frame. The weekly one was the biggest concern and still remains a concern because of a strong bearish engulfing candle. Right now, what silver is doing is trying to negate this candle. Well, whether it succeeds or not, we will know only on Friday, but so far on the weekly frame, the odds are bearish. And if we look at our chart, so there are still 2 paths that we are looking at. The blue one was gaining more odds recently, and at this point I don't know whether we will shift to the red one or not. What we need to see is the end of the week and the weekly candle. It will tell us the story. And on a micro level, yesterday we discussed the potential impulse of the bottom, and I'm talking about the green path here, this one. So this one, it's a different color. So the green path, if this is if the wave 3 completes here, and we see wave 4, wave 5, then we might consider an impulse, and it will be just a starting impulse for a move higher, and probably much higher. However, if silver reverses here, somewhere here in this area, maybe a little higher, then we might see a different story. So then we might talk about the blue count potential of even a bigger correction before moving lower, or as I mentioned, could be potentially wave 2 of a much longer impulse. But these counts are not of high probability right now, so the green is most probable. Now let's have a look at SLV. Yesterday SLV fooled us with the red candle here and potentially signaling a reversal, and today it was strongly negated with a big and strong bullish move. So far SLV is bullish, and if it closes at this level or higher, it will negate this formation. However, there are still 2 days and we need to be patient for the weekly call. Speaking about gold, an interesting picture today. I would expect it to be more energetic and build a bigger candle. However, this technically is a bearish candle right now, and possibly even a bigger formation like an advanced block, these 3 candles together. And this is vulnerable right now. If gold makes a bearish candle tomorrow, like even a small red one, it could be a bearish engulfing for this green doji that was formed today. And the weekly concern remains. So this is the weekly closure, weekly bearish engulfing, fairly rare candle for gold, and the chances for a reversal here in high 80s. Let's see how gold closes the week in 2 days. 15-day candle also closes on Friday. It would be interesting to see what kind of candle it forms, and it will be our first indicator for the monthly closure. That's about precious metals. Let's now move to oil. Today we posted a special video for oil and we discussed many items here. So technically oil is falling and we are not seeing any reversal pattern at this moment. Well, it can do something tomorrow, but so far we don't see any strong ones. The closure today on a daily, yesterday on 2 and 3 day frames, and on the bigger ones, 10-day, everything was bearish, and right now the weekly is shaping up as bearish, and this would be a strong technical support. The chart remains the same technically since February 24, when we called this last move, and it was probably a gentleman's exit on February 24. Since then oil lost about 8%, and the chart remains the same, so potentially it could be an ABC formation, but we are seeing that it might continue lower. And now let's take a look at 2 big oil companies. ConocoPhillips, this was our call at the end of January when Conoco was 101 and change. Right now it is sitting at 88.88. Well, that's a 12.6% loss, and so far we are not seeing any reversal pattern. If you followed our previous discussion, you remember the candles that we discussed there. And speaking about Exxon Mobil, this is a big concern for this company, because right now if we look at the micro level, we are seeing that technically this is an impulse formed. Maybe it will go a little lower, but in any case, this is a fairly clear impulse. And if we look at the bigger chart, this is what we were talking back in May, saying that Exxon has a chance to go to this target, and after this target it will go down, and this is what's happening right now. I was thinking about two possible counts here. One of them is blue one as an expanding triangle, and another wave 5 upward here. However, now it looks like this count is invalidated, the blue one, because of this impulse. Waves in the triangle cannot be impulses, and the red one is the only remaining for now. So the plan is to hit somewhere here between 96 and 88, and this possibly gonna be wave A of a bigger correction. Wave A then might take wave B, maybe longer, and the most typical shape for this type of correction would be a zigzag. So that's what we are looking for Exxon. Now let's have a look at the indices. First of all, we'll start with S&P 500, Nasdaq, Dow Jones, and Russell. What we are seeing here is a fairly strong bullish move, and we cannot ignore it. So technically it is going to be at least a short-term bottom. Maybe it will become a bigger one, but tomorrow is a good perspective for a continued rally or rebound. A bullish engulfing on S&P 500, bullish engulfing for Dow Jones. Nasdaq is not that convincing, and Russell also needs bigger green candle in order to confirm this one. If we look at the 2-day frame, which also closed today, S&P 500 is neutral bullish. Nasdaq made a very nice bullish engulfing, and Dow Jones and the Russell, they need confirmations for this move. So this is the cash index. However, if we look at the futures, so they are not as bullish as the cash index, and this is technically a concern. We'll see. We need to see a strong confirmation tomorrow, closing above Tuesday's high, at least above Tuesday's high. And only in this case, this will be a bottom, a short-term bottom for the futures. Now let's have a look at the waves. So this could be a wave that we were tracking since middle of February. And right now, if we consider this as an ABC, it has ideal proportions. And this wave that I marked here as wave 1, it could be broken as an impulse, and the wave 2, potentially wave 3 here, 4 and 5. So if we have an impulse upward here, and today is March 5th, and then a reasonable consolidating move, we might be looking for a bigger impulse, even bigger impulse down the road. But we'll discuss it a little bit later in our Nasdaq session. And for S&P 500, I also would like to take a look at the sectors. So what we are seeing here, financial formed a thrusting line. It's I would expect it, if there is a serious reversal coming, I would expect financial to lead it, but this is technically a bearish continuation candle. The same kind of mediocre bullish candle by technology, which is somewhat weird for the sector, which usually leads everyone. And healthcare is trying to negate the candle that it formed yesterday as a bearish engulfing, but it wasn't sufficient enough, so we need to see a move tomorrow. Also, consumer discretionary tried to form a bottom. Energy, utilities, XLP, XLI, industrial, and staples. So technically, none of them confirmed the bottom. There is a possibility for tomorrow, but something, it can happen in both ways. So I would say that there is about 60% chances for bulls and about 40% chances for the bears. That's how I would treat this particular picture. And the final one for the S&P 500, we'll have a look at the big companies. So the only one who made a clear bottom is Microsoft. Every other one is not bullish at the moment. At best, they are neutral. So Microsoft is expected to move higher tomorrow. How the other will follow, we don't know. So the chances are maybe slightly bullish, but closer to the neutral. And speaking about Berkshire Hathaway, it's technically it's bearish, and it wasn't able to overcome the resistance level, so it was rejected here. And this is a thrusting line, which is a bearish continuation candle. We might see a few of them moving, the price moving horizontally before dropping lower. That's the perspective for the Buffett's company. And now the feature of the day is Nasdaq. Let's have a look at Nasdaq, what we are seeing here. First of all, I would like to say that this is a beauty. We called this move on February 19th when Nasdaq was 22.2K, and right now it ended right in our target area, although it was a very difficult call. Now let's have a look at the shorter frames and the waves. So this was the wave that we've been tracking. Potentially is an ABC or 1, 2, 3, 4, 5. So far, Nasdaq tried to form an impulsive wave here. That's why I put an 1, 2, 3, 4, 5 impulse here. So the wave from the bottom here is impulsive. If Nasdaq forms a bigger one, this would be an impulse if we see a solid structure here. However, we might need to wait for a couple of days until this happens. So we have to be patient in this time. So if we look at the bigger picture, this is Nasdaq's wave since October 2022. This is what we've been tracking. And I put this level here, 20.02525. This is for the futures. Nasdaq yesterday stopped just 50 points above this line. If it crosses this line, then this final impulse will be invalidated. I mean the target for this rectangle, and we would be considering this potential impulsive wave 1, 2, 3, 4, 5, and now a reversal toward this green level. So this is indeed a very critical level to watch. If Nasdaq breaches it, well, then this green rectangle becomes a legitimate target. So this is approximately the level. So it would be somewhere between 38 and 62% of the length of wave that started in October 2022. That's for the bigger part. And speaking about Nasdaq candles, we already discussed them, but not the entire picture. So I'd like to emphasize here Nasdaq, this is futures. So Nasdaq is trying to form a bottom here, and it bounced off the 200 days moving average, which is the strong support for now. And if we see a strong bullish move tomorrow, well, then it could be a it could be a reversal. The big risk here on the biggest candles, I would say, at this moment. This is the weekly frame, and it has a chance to form three black crowns. We know that three black crowns are not a nice formation, and what I highlighted it here, circled. This is the three black crowns. This is what happened after three black crowns on the daily frame happened. So you can imagine what could be the impact if it happens on the weekly frame. And I would like to remind that Nasdaq closed a few days ago its 10-day candle with as a huge bearish inside down, and 15-day is closing on Friday. In order to make it bullish, Nasdaq needs to rally about 7% in the next 2 days. Just ask yourself a question whether it's probable or not. All right, to summarize, markets are on the edge, and the next moves in S&P 500, Nasdaq, volatility, and the dollar could be decisive. Commodities remain under pressure. Oil stocks are breaking down, and tech is still struggling to find solid ground. With Nasdaq approaching key mid-term levels, silver on watch for major breakdown, and the bond yield signaling the next pivot, the time to stay informed is now. Join us inside our daily market waves reports for real-time tracking of every critical development, and subscribe to investingangles.com for premium insights into indices, commodities, bonds, and stocks. Stay connected on YouTube, Twitter, Telegram, and Reddit for up-to-the-minute updates and expert Elliott Wave analysis. Thanks for watching, and as usual, happy trading!